Hello traders, it's Forex Evangelist right here and welcome to another video on this YouTube channel. So in today's video, we're going to be talking about something very simple, but not simple as a lot of traders may think, because after watching this video, you will understand something, or you will see the price chart in a different way that you have not been seeing it before. And what are we talking about? We are talking about impulse and corrective structures. Hold on, you may think you understand it very well, but using wave analysis concept, you will see that you have been looking at impulse and corrections the wrong way. So if we start with impulse, we will annotate on the whiteboard rather, and then go to the chart using an example of price to show you how impulse and correction moves in the forex market, so you can be able to identify impulse and correction to tell what really is the market structure, to understand your trend. So moving on with impulse, we can say impulse is a fast and sharp move of the market. So impulse can be a one wave. It is usually fast. It can be one wave, it can be three waves, it can be five waves, but it is usually fast and sharp. Sorry, don't mind my drawing. I think I need to annotate again. So you see, impulse can be one wave, it can be three waves, it can be five waves. It is usually fast and sharp, like you can see. But correction takes time. Correction, and it's usually slow and messy. So imagine this building now, this roof. You take down this building. Now, putting back this structure back to what it is going to take time, because you are correcting, the demolition that has happened, maybe using a bulldozer. So correction in the price chart needs to take time, and it is minimum three-wave structure. But before we go to that or move too technical, let me explain something that is very familiar to retail traders, especially when they look maybe when they go to Google and they begin to search what is impulse and corrective structure, what is market structure. Now let's go to that. Okay, when you maybe search on Google and ask what is impulse and correction, or what is market structure, you begin to see price showing you something like this, higher highs and higher lows. I'm not trying to say this is not correct, but this is not in real time correct. Okay, because you can see price is definitely creating highs and lows, but realistically it's not how price moves on the chart. So now moving on to correction, when you have an impulse that comes in the form of either one wave, three waves, or five waves, price is usually fast and sharp for the impulse, but the correction is minimum three-wave structure. So meaning, if this is an impulse, let's use this five-wave structure as a case study. If it's an impulse and came in a five-wave structure, the correction is minimum three waves, and it takes a lot of time. You can see how big this is. This is the corrective structure. Okay, correction usually takes time. So meaning, if we have something like this, impulse and then downside here is not the correction, rather it is part of the correction. This is something I want you to understand. It is part of the correction, not the correction. So when you have impulse like this, you expect to have a correction of this small impulse and then downside again, because it is minimum three-wave structure. Then before you can be looking for maybe a bullish move, because maybe you're anticipating price to continue moving higher because maybe the trend has been established. Okay, this is what impulse really is and what correction really is. So now we have understood that impulse is usually fast and sharp, correction is slow and messy. And again, correction is not maybe a mode that is going to be three waves. It can be five waves as well, meaning maybe if you have an impulse like this, correction can look like this. You can see. Or you just need to understand that correction takes time. So correction is minimum three waves, but it can be five waves. But impulse is either a one wave structure, a three wave structure, or a five wave structure. Just know it's usually fast and sharp than the correction. Okay, that's wonderful. So let's try to go to the charts now. So now we are on the chart. And the pair we can see here is GBP UD. Okay, so this is going to help you understand how price really moves. What I mean by price moves in impulse and what correction. Okay, now look at it. Let's just imagine from this point to where price is currently is. That is from this point here to this point here. So just pay attention, to the TV screen. Okay, from this point here, let me annotate again. You can see it here to this point. That is from here to here. Now, when you look at this, you see that price gave us impulse, correction, impulse, correction, impulse. Impulse, correction, impulse, correction, impulse. Now, what can you understand or what can you tell from the explanation I gave you when we are annotating on the whiteboard? Is that this is fast, this is slow and messy, this is fast, and this is slow and messy, and this is fast. Hope you can see that. You can see the fractal nature of the market, how the market is moving. So you could see that this impulse here came in the form of a three-wave structure. 1, 2, 3. You can see that 1, 2, 3. An impulse, but you can see it's fast and sharp. But look at this correction here, very slow and messy. You can see impulse, correction, impulse, very slow and messy. Don't worry about the internals of the structure. In subsequent videos, I'm going to explain the internals of this structure, but just so you understand that correction takes time. Now, this whole thing is the entire correction before price peaks again. So understanding of what impulse and correction is, and then wave analysis, which that is our technical concept, and in subsequent videos as well, I'm also going to be talking about my wave analysis concepts, in this video. Okay, and you can see another impulse that came in a 5-wave structure, but an impulse fast and sharp. Now you can see a correction that came in a 3-wave structure. Hope you can see that and see how the market reacts and how the market moves. Now, if we look internally, inside this structure, now let's try to zoom in. Now, what you are going to notice here is this. After we got this move, you can see an impulse came in a 3-wave structure. 1, 2, 3. Now, what do we get next? We got impulse. You can see the correction inside the correction. Impulse for this impulse. This structure is completed. So meaning what happened here is simply impulse, correction. So you can see that probably a lot of traders, once they begin to see this pullback here, they call it correction and they enter too early. But that is not a correction. Okay? It is never a correction. A correction needs to take time. And you can see this is where the correction ended. And what happened after then? Price began to push to the downside. Impulse, correction, impulse, you can see impulse, correction, impulse. Entirely, this is the correction. And after that, we began to see what? It moves to the downside. So, this is an impulse here. This is an impulse here. This is the correction. So, you can now see the market differently and understand what impulse and correction is. Let me take you to another example down here as well. So you can see it takes time. Downside, impulse. Here we got a correction. For this down, we got this down. I'm going to be talking about wave analysis, don't worry. But this is how price moves, to give you a nutshell. For this downside here, we got this down. For the upside here, we got this up. For this down now, we got this down. The entire structure becomes complete. This is it. So you can see, if you can be able to read wave analysis very well, you will understand how to read waves and structures correctly and be on the right side of the market. So you can see that corrections takes time. Now, if we can go to another currency pair as well, let's say, let's use GBP USD because it's a very popular pair amongst traders, right? Good. So now, look at this place again. Price here gave us impulse. You can see that, which came in the form of a 5-wave structure. Impulse, correction, impulse, correction, impulse. Now, what do we get here? 1, 2, 3. And what you need to notice is that regardless that this is the correction, the correction inside the correction is also meant to take time, because what starts the correction is an impulse. So when you have a push down and then a push up, this is just an impulse. Another the correction, I don't know if you guys are following, it is another impulse, not a correction. So we need to see a three-wave structure which is going to be a correction of this impulse and then another impulse, because this little trend needs to be completed before we begin to push the downside again. And that is exactly what happened here. Okay, impulse, we got a sharp down. Now you can see the clear three-wave structure here. 1, 2, 3. And then an impulse that came in the form of a three-wave structure. Remember we said impulse can be 1 wave, 3 waves, or what? 5 waves. But correction is minimal 3 waves. Okay, so altogether the bigger correction now is impulse, correction, impulse. We need to push to the downside again. So hope that is understood. So I would like you, to watch this video to the end and use it to practice. Leave your thoughts in the comment section for me. And if you have any question, make sure you ask your questions there. I'm going to be answering those questions. Okay. Make sure you like, share this video to other traders, subscribe and hit the bell icon, and see you in my next video. Bye for now.